Oh, Lord. Sweet baby Jesus in heaven. Are the banks about to break? The nation's second largest bank failure ever happening just yesterday. First Republic Bank shutting down with over $230 billion in assets as of last month. The FDIC took it over and sold it to a teeny tiny bank known as JP Morgan Chase. This all stemming from Silicon Valley Bank's collapse in March, as you remember. And now Massachusetts Democrat Senator Liz Warren warning of a crisis. She's blaming the Fed. Watch.
Do you think the banking crisis is over?
I don't see how anyone can say that. Because remember, the Fed report that just came out on Friday criticized the Fed sharply for its regulatory and supervisory failures.
Remember, too big to fail? Well, 3 of the 4 largest U.S. bank failures happened over the last 2 months. So what in the wide world of sports is going on? Here with me in the studio to discuss, Fox Business senior correspondent Charlie Gasparino. So, Charlie, break it down for people who are a little worried about this. Are there other banks who suffer from the same weak capitalization problems that First Republic did?
So you have to look at it this way. The Fed did create this crisis, but it didn't create it the way Elizabeth Warren is saying. What the Fed did was print money like crazy. Okay, the federal government spent money like crazy. You created something known as inflation. And what you do is when you put that much liquidity in the financial system, including on a bank's balance sheet, it's going to go out and do stupid things like invest in all these commercial real estate loans in these see-through buildings that you see in Manhattan and in other places. I was in Chicago. I mean, I can't believe how many see-through buildings I saw in downtown Chicago. So they went out on the risk spectrum, and now those loans are depressed. On top of that, while this was going on, they had to buy assets. You have to keep capital. Those assets were bought at the top of the market. They were treasury bonds at the top of the market. Now, obviously,
now what are they worth?
They're worth less. So when you put that together, both sides of your asset base is depressed. Now, if you throw in on the top of that banking is essentially a confidence game. If you don't have confidence in your institution, if you think First Republic has way too much crappy loans out there, if you think SVB, Silicon Valley Bank has, way too much, revolving loans to startup tech companies that are going to go bust, then you pull your money out. Not only that, you pull your money out because you can get better interest rates in money market funds. Put all that together, and you could have many, many, many more of this sort of situation. I hear the whisper number is there's 24 banks like this.
What are some of the big ones that you're concerned about?
Well, they're not the big ones. They're these banks with a capitalization of about $200 billion, which is essentially where First Republic. I think they were about 250 and below. I mean, you look at the number, all the stocks that trade off. Now, there's a lot of short sellers out there trying to capitalize on this, saying that they're all in deep trouble. I can't tell you. I don't look at I don't have their balance sheets. But remember, this is a confidence game. If you can spread a lack of confidence, if you get scared, and you get scared, and you get scared, you pull all your money out of Pac West, which is located in Los Angeles, is one of the banks that took it on the chin today, then guess what? Then they're in trouble because their loan book is depressed, their asset base is depressed. To sell, you have to sell those assets, not at what you bought it for, but at the depressed price. You see what I'm saying?
So you're taking a loss, but also people who have, and the problem with First Republic, if I'm not mistaken, is the majority of the depositors had deposits accounts worth more than the FDIC would insure.
That's another sort of whole issue here where they keep insuring.
I mean, but if they psychologically think that their money's going to be gone,
right. Well, then
they'll do whatever they can. But they pull that out, and that just hastens the whole
But you know what they're doing?
slide.
They're making it worse because what they're doing is they're saying, okay, we'll basically cover every deposit, so then you'll keep your money.
Question, should the government be covering those deposits over?
No, because it creates what's known as moral hazard, and you take even greater risk. And I mean, that's part of the game here. Why are banks in trouble right now? They took enormous risk when the Fed was basically screwing with the dynamics of the markets. It was essentially printing money. It was giving them liquidity. So you have a real problem here. Here's another thing. We talk about too big to fail, that you don't want that. Elizabeth Warren, too big to fail. Biden, too big to fail.
But she created the system so JP Morgan Chase could go in and under these special circumstances and buy a failing bank.
Think about it. I'm not saying JP Morgan's going under because it's run by a smart guy, Jamie Dimon, and they have, they understand risk management. But they control 13% of all U.S. deposits. That bank is the U.S. bank. They can't go under. If they go under, it's like lights out. And by the way, again, every major bank has an issue. If you have to sell all your assets right now to make deposits, you could be technically insolvent. And it doesn't matter which one you are. That's because it's a confidence game.
Well, I have confidence that you'll always bring us the truth, Charlie Gasparino. Thank
will.
you for being here tonight.
Anytime.
You're a good man.
Thank you.
Smart one, too.